Hello, and welcome to a KCAL News special, Home Insurance Crisis. I'm Pat Harvey. This town hall is not a debate, but rather an informative session to help guide you, whether you're an owner or a renter, and hopefully lead to solutions and understanding. And to help our discussion, we are joined by an extensive panel with some of the state's leading industry experts, insurance experts, consumer advocates, and community voices. We are also joined by our consumer and investigative reporters, Christine Lazar and Julie Watts. They'll offer insight on what they've learned firsthand from reporting across the state. And before the Palisades and Eaton fires, the California insurance landscape had already begun to undergo a seismic shift. Many customers found out they wouldn't be renewed last year. And since the fires, the crisis was exacerbated. And now even those who are still insured are fearful of what the future may bring. Will they still have policies when it comes time for renewal? Will their premiums skyrocket? And do they even have enough insurance if a disaster strikes? These are just some of the many questions we'll dive into. Before we begin, though, I want to point out that we did invite all of the top insurers in the state, including the Fair Plan, State Farm, and Mercury, but they declined to participate. So with that, we will begin. And Joy Chen, I want to start with you. You are the Eaton Fire Survivors Network spokesperson. So I want to ask you, what is the biggest concern that you're hearing from people regarding the insurance issues?
So the Eaton Fire Survivors Network is a community of 2,500 displaced families. We've now reached out to the Palisades, and now I'm representing families from both Eaton and the Palisades fires. And what we are seeing now, 5 months after the fire, is that whether any individual family is recovering or not depends largely on which insurance carrier they have. So, for example, my family is with USAA, and we suffered smoke damage. And after 4 months, the USAA sent in remediation company, sent in independent hygienist, which found more problems. The remediation came in again, hygienist again, and we're back. But thousands of families are sinking every day into ever greater financial ruin, not because of the fire, but because of the failures of their insurance companies to fulfill their contracts. Okay, that's not all companies, just some.
Well, for you and your family, you obviously have the right company.
We are so lucky.
And you know the right questions to ask of these people.
Yes.
So, Tony Signorelli, you're with the Department of Insurance, and you're the Deputy Commissioner for Consumer Services and Market Conduct. Where were we before the fires, and where are we now for insurance availability and renewals?
Well, certainly, as a result of the fire, there's definitely increased concern by the insurance industry as to the risk that's out there. And so, with regard to the people that live in LA County, though, there are moratoriums in place for the next year for those that are within those fire perimeters and adjacent zip codes. There's also, if you had a total loss, you have a 2-year right to renew your policy, so they're protected in that sense. And then hopefully the goal is for people to rebuild with home hardening techniques and hardening contracting techniques to be able to meet the insurance company's requirements for having more options with different companies, better discounts, that sort of thing.
Okay, and home hardening, obviously, to make your home, the surrounding area, more fireproof. We're going to talk about those kinds of things later in this broadcast, but that's very important to know because I know a community up in Northern California has done just that, and they're doing much better. Rex Frazier, I want to ask you a question. You're president of the Personal Insurance Federation of California. So what are some of the reasons insurance companies are not renewing people, and is this trend expected to continue?
Well, certainly we don't hope it continues. We're eagerly awaiting the state to finalize a set of regulations that would allow companies to factor in the appropriate factors when it comes to pricing and ultimately going back into high-risk communities. We anticipate by the end of July, at the latest, that those regulations should be done and give companies a chance to make filings that allow them to start writing in high-risk communities again. I would say the real change in the market I saw started in about mid-2019.
After Woolsey.
Well, yeah, after the 2017 Northern and Southern California fires, there wasn't really a perceptible change in the marketplace. It was really after 2018, and I think the insurers started wondering, will events they thought might happen every 100 years start happening every 5 or 10 years? And that definitely led to a big change in the market, that uncertainty.
Yeah, and certainly we've seen fires. We now say that it's all season long or all year long as opposed to from October to December,
Exactly.
which had been the case for many, many years. So Harvey Rosenfield, you're a founder of Consumer Watchdog, and you were instrumental in writing legislation that shapes how the insurance industry runs in California, as well as its consumer protections. What do you think the state is doing wrong, and how do you propose to fix it?
There are two things your viewers need to know about insurance. The first is that insurance companies make most of their profits from investing our premiums. So they have an incentive not to pay claims promptly because they get to hold on to that money, it sits in the bank, when it really should be paid out immediately to people who need it. The second problem we face, frankly, in California now is that reforms that the voters passed decades ago that have worked to protect consumers have now been abrogated at the behest of the insurance industry. The commissioner, as Mr. Fraser just said, has blessed and created a change in the law so that insurance companies can charge even more money and do so in ways that are antithetical to what's in the best interest of consumers. And that's a separate problem because the commissioner's program really is the insurance industry's program. It's deregulation. And the result is going to be much higher premiums in the short term as those regulations that Mr. Fraser referred to kick in this year. It's not going to solve the problem. It's just common sense. If rates go up, less people will be able to afford coverage. And that's the opposite of what we really need to do here in California.
Okay, listening to that, it's what can we do about it, though? You know, you talk about what they were regulated to do. They take our premiums. That's supposed to go into a reserve.
Right.
So when you have an issue, like a catastrophe, they're able to dip into those reserves and find money. Mm-hmm. But it seems like we've had so many lately that meet that level of catastrophic action. The coffers are what, replenished? I mean, how do you, go ahead.
Well, I mean, to take both problems, and Joy's kind of an expert as a survivor of these fires, as a consumer in this environment, you have to be very vigilant that your insurance company complies with the law. You can't take no for an answer. You have to insist and assert your rights. The insurance companies count on you not doing that. Yes. They want you to just walk away, to get frustrated or exhausted. At the more important, not the more important, but at the broader level, what can we do about higher rates? I mean, that's just Consumer Watchdog, where I work, spends every day challenging insurance companies that are trying to overcharge people. Mm-hmm. And we're asking people to send us their complaints. The Department of Insurance is getting complaints. We know this. We're trying to monitor this process and, as much as we can, protect the public against misbehavior by the insurance companies. But it's a long process. And the danger is here that by the time all these new regulations take effect and rates go through the roof, people aren't going to be able to afford it.
Go ahead, Joy.
Yeah, I mean, I think what Harvey is saying here is what we're seeing happen with Eaton and Palisades Fire families, which is that we've paid our premiums for 20 years, 30 years, expecting that if disaster struck, our insurers would be there. But in the case of so many thousands of families, their insurers are not there. And unfortunately, Commissioner Lara, who we elected to protect California families, has been giving rate hikes, continuing to give these rate hikes without investigating and making sure that companies are actually delivering the service that we paid for. There was just an emergency rate hike for the largest insurer in the state, State Farm, which Commissioner Lara acknowledges is the worst actor, that he's gotten the most number of complaints of any private insurer. We submitted to Commissioner Lara 400 firsthand accounts of State Farm's delays, denials, many of them apparently illegal. And we simply ask that the regulators